Hey guys, welcome back to Forex Friday. It's me, as you guys know, doing another video, basically going over this week's trades, and basically I guess you could consider this back testing, but it's more of, I guess it is back testing, but it's more of an explanation of why I took certain trades. And as you guys can see, I actually leave up the trades that I took throughout the week. I'm sure you guys could see. So let's just go over it a little bit, how my strategy works and where I place certain trades. You guys can see this is all from the weeks prior. See this? This is one win. This is the second. This one was not a trade that I took. Then you have a little bit more extra down here. You guys see this was a loss. This was another loss. Um, this was a loss. This was not a trade I took. And then here's another one, right? You guys get it. Like basically, I'm just gonna be going over how I identify areas that are important, I guess, to me, and how I want to actually, go about entering the position. And we're gonna go all over that today. So that's what we're gonna be talking about. So as you guys see, this is the pound yen. We're on the 15-minute chart. So what I like to do usually is, first of all, I have to identify what session you're doing. So I'm doing the New York session, which is from 6. Well, technically it's from 6 to 12, but I've become more of like a 6 to 9 kind of trader. But sometimes I go 6 to 12. If I see a possible setup that I like, I'll go up into 12, because there's still like, a lot of people think that it's only from like at 9, 9:30, New York Open, then it's like a stock exchange open, then it's kind of like dead. But I don't really think that. I think that, well, I mean, I just look at the volume, and here, look, what is this, 7, 15, 8, 9, 10, 11. Like, I mean, today it's Friday, so it kind of died down a little bit, but on like other days, like, you can see like that there's still volume. Well, this they didn't have, but here, look at this, 7, look at these moves, 9, 9, 10. Look at these big moves. Like, all this is happening. Look at 12:30. Look at all these big moves. They're still happening during the day. I'm not saying you should sit and wait for like 12 hours, but I'm saying that, you could start out by like, what is this? Let's say, this is yesterday, right? The 4th. Today is, what is today? Today is the 5th, right? So this is yesterday, right? So, here you got, what is it, 6, 7 a.m. right here. Look how big these candles get, right? 8, 9, 10. Right here is 10, 10, 15, 10:30. Look at that. Until 12. You see that? Look at that. Look how big these candles get. All this is until 145. Look at these moves, these corrective moves. So, there is volume in the market. So I personally recommend 6 to 12, but not in the sense from like 6 to 12. Like, you can go from 6 to 9, take a little bit of a break, maybe put on an alert on the chart, see if you get, if your target is hit, or like you have an area that if it goes past, then it would alert you to get back onto the computer and make the trade, which is what I usually do. And then I, like, so I'm not always sitting in front of the TV, in front of the computer. It's annoying. It's long, you know, sitting there for hours and hours. You need a break. So you go take a break, and then you just get an alert on your phone. You go back, you make the trade. That's it. So now let's actually go over a trade that I took today, right? So let's actually see that. This was not, I would have won this trade, I think, but I didn't actually take it. I said if it breaks below this level, then it will go past, and that's exactly what it did. And if I actually executed, this is a trade I would have won, but I didn't. I executed on this trade though. Basically what happened is that, we see this is the London Open. Came up here to find a resistance, broke down from this level, like this completely broke down, came back to retested it again. But as you guys can see, cannot break above. So this is showing us that price most likely is going to keep going down, right? So it goes down, 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 down. Okay, I'm just kidding. But it actually retests this support, which I found here. And this is a very important level. So even though the market actually touched down here with the wicks, it closed above this level right here. You guys see that? So this is the level that I'm actually looking at right here. So yeah, this is the level that I saw as interesting. As you see, 1, 2, 3 closes above. And then well, look at that. Came right back down, retested it 1, 2, 3, 4 times, 6 times. Okay. So this is a level that I saw. I anticipated it to come back here, and then it started moving up. And then I said, wait a second. So as you guys can see, price rejected this level from going down. It tried to go back up. You see, that's what the wicks are. You can see, what are wicks? Wicks, as I explained in the previous videos, wicks are indicating that the price had tried to move up in the past. You see, price tried to go up, but then ended up closing down bearish, meaning red, negative, like going down in value. So then you had another price try to go up, no wick at the top. What does that mean? It means it's going to go down. And then you try to go up again, but then it went down, still indicating bearish pressure. But then you had a little bit of a wick fill. You had a rejection, bearish trying to get control. Then you had a touch of support, and look at that, price is not able to go down. So now I saw this big candle break above these wicks, but look, it tried to go down, it went down, it was red, but look, it couldn't break below this level. So I said, okay, if that's the case, right, so that means that we're probably going up. And look at that, we got a wick fill. So I anticipated the wick fill, but I guess I like to play things safe. I said, you know what, I'm gonna take a little bit. This is not a good trade. I could have done better, in the sense that I could have maybe entered on this wick fill, because, you know, probability speaking, it would have a higher chance of going up. But I just wanted to see a break and close above this level here. I'll actually identify it for you guys, so I don't have to keep pointing at it. See this level? I actually drew it out. This was my indication to enter the trade. I said, okay, if this level is broken, because look at that, price tried to break above and it could not, but now it's finding support. So I said, okay, I don't want to get faked out. I don't want to, you know, get fucked around by the market. So here's what we're going to look for. We're going to look for a break above this level here. It's probably going to retest, and if it doesn't, then I missed the trade, whatever, not a big deal. But I want to see a break above this level, right? And we should be good. So I saw a break above. I entered at this level right here. I entered on this candle. Price came down, found support at this previous rejection area. It found support here before moving up and hitting my take profit. And I took profits. I could have taken profits up here and made a bigger risk reward, but I went for 10 pips because, as you guys can see, price, I was scared about this area, because this was an area that was previous, look, I'll show you guys. This was a previous support here. And, you know, support can become resistance, right? So I was kind of afraid of this area. So I took profits. Just, you know, I anticipated the move up, but I just wanted to be safe. So what is this? This was a 1.35 risk reward, right? So that's 100. This would have been a $135 trade right here. And, you know, eventually, because we're overall on the downtrend, it did keep moving down. And then I said, okay, if it breaks below this level, then I actually didn't enter this trade, because I have a rule, one and done for the day, you know, one and done, that's it. So I took profits here, and then it went down and it broke below this level. And then I said, okay, if it breaks below here and it keeps going down, then high probability it's gonna go down. So I took profits here. I would have taken profits here. This would have been a really nice move, but I didn't end up doing that. I just watched it play out, and I just said, what if, you know, just keep testing my strategy and improving upon it. And that's basically what happened, right? I was correct in my analysis, which is good to know, but it's not necessary. Here was another trade I did. I actually didn't take this. Again, this was an analysis that I just wanted to see if it was correct or not, and it was. I said, okay, here price coming back up. If it breaks these highs, then I'm looking for an uptrend, impulsive move, which is again what happened. It went up to 20 pips. This would have been $140 right there if I used the $100 trading size. So which is what I usually do. So I'm just giving you guys the numbers in terms of what I would be trading, because I'm risking $100 per trade. So that would have been $140 right there. Then it went up. Yeah, you say this was yesterday's session, which actually I think I did take it. Yeah. No. Oh, yeah. Okay. No, I took these trades here, and this was later on during the day. I didn't take this trade. My bad. I'm sorry. I took these two trades right here. So here now let's look at these trades that I took yesterday, right? So basically, this is what I woke up to. You see, this is the London Open right around here, 2:30, 2:50. Yeah, right there. This is when the London session opens around this time. So you guys see, price went down, moved up. And now this is where I woke up. I am awake on this candle right there. Okay, this is where I woke up. This is all the traffic from London. Not that much volume actually, which is surprising because London last week had a lot of volume. Actually, the London session was doing better, and the New York session was doing really bad. And now the New York session is doing good, which is I thought found that interesting. But here, let's go back to where we were. My bad. Okay, here where we were. So this is showing us that look at this. You got a wick fill of this brick, but it broke above this previous resistance here. You guys see that? So I found that very interesting, and that's signaling to me a bullish move, which is exactly what we try to capitalize on. And you guys could say, oh, this is hindsight. It's easy to say in hindsight, which is true, but these are trades that I actually took. And look, I'll even show you how do I get out of this thing here. I even go, you see, this was on the 7:45, and then I took another one at 8:40 on the 4th. So let's see, at 7:45, we did 7:45. Let's see where I took the trade. 7:45. Yeah, okay, right there. Okay, so here's where we entered, right? Here's where we entered, right here. On this candle right there, 7:45. This is the candle. Let me zoom in. Right there. This is the candle we entered on. Why do we enter in this candle? Because I said, okay, here we had a rejection. Price cannot break above. If I see a break above this level, I think that it's going to keep going up. So I got a break above. I entered. I got a retest. And I saw the price was really struggling to break above this area. And look, you see, it's not really signaling. So I was kind of scared, and I should have let it run. But I took profits here, which was 6 pips. So it was like $30 I made here. I took $30 here. I secured positions. Sometimes, I just think that, you should have let your trade run. But other times, like, it's easy to say, or you should have let your trade run. Look how much money you would have made, which is true. No one's saying that it's not true, but it's just hard to in the moment kind of to see that happening because you don't know that's going to happen. You think that's going to happen, so you place your bets. But looking back, I should have let it run. I actually ended up. I said, okay, if this breaks above this, then I'm gonna enter here, and that's actually what I did. I actually did enter here. How much did I make on that trade? I actually don't even know. I think I did. Okay, on this trade, I did. Okay, I made $70 and the reason why I didn't make 190, like $200, was because I took profits. I secured my profits early because the price was just really struggling to continue up. And that's my fault. Is that I take profits too early. I secure my profits too early. I need to let my trade run. I need to learn more about how to take profits better, and when to let it run and when to actually take them, because I just need to work on that myself, because it's just, guys, in the moment, like I said, looking back, it looks easy. I could have done something like made from here all the way up. I would have made like 10, like I don't even know how much I would have made. Let's see. That's my initial entry, right? Which is right there. Let's say I let it run. Here, I'll even do the same stop loss that I did. Let's say I didn't touch it at all. I just let it run. 9.8. That would have been $980 right there if I had let it run. But you never know these things, right? You don't know that it's gonna go all the way up there. You need to play it safe. You don't know. So obviously I need to improve, but these are the lessons that you teach yourself, and you improve by learning, by going back and seeing how you could have done better. That's the only way, and that's what I'm sharing with you guys. Basically, my own failures, but showing you how you can also do better by learning from my mistakes. So this is basically what I'm talking about. So I should have trusted my analysis in a better way, and that's my takeaway, at least from this session. And you just need to see, wait a second, if price is pushing up and it's not going down, then where is it going? It's going up. If it's not going down, right, it's closing bullish. It's not going below this level, which was, look at this, 1, 2, 3 times, 4 times respected by the market, and now the resistance has become support. So that's showing that it's going to blast off. This is like a launch pad. It's going to launch off of this, And I should have stayed in the trade. I should have taken profits around here and then let like 20% run. I would have made like maybe $400 or $500. But you know what? Sometimes you don't know, and that's fine with me. And I could have done a better scalp. You know, I'm still learning how to scalp. I'm not a pro trader by any means, but I am trying to share my knowledge with you guys here today. And hopefully, I am helping some of you who are interested to learn. But yeah, let's keep going here. Let's see some other trades. Okay, this is actually a winning trade I took a few days ago. Here, let's see. This was on yeah, this is on the 3rd of March. This was, what is this? That was 2 days ago. So here's my trade. So price came down. This was London session. No, this isn't. This was in New York. My bad. You got this big downwards candle showing you that it's going to get filled. Look at that wick fill. Try to go back up. Fill the wick. Try to go back up. Rejection. Big rejection. And look at that. You got a rejection of this level, right? So what do you guys see here? This was support, now becoming resistance. You guys see that? Support, support, support. Broken. Came back. Boom. It's like ping pong. So now you got this wick signaling down. So I said, okay, you have all these rejection wicks. You know, you might find support. You know, you never know. So I said, if the market goes below these wicks, I'm gonna enter to take down profits here. It was a pretty small trade, but still a trade nonetheless. And I entered here, and it took. I could have went further down, but you know, you never know. I went for 9 pips. I could have went a little bit more, but it did actually come in to fill me out right there. So that was another winning trade. I actually took no losses this week. I'm very surprised. I was actually 100% accurate this week. I have a 100% win rate at the moment. Let's keep going to some other trades that I actually didn't trade on these days because there wasn't really anything. You guys can see, look at that. Let's go back to here, 6 a.m. Well, I guess there was here, but I missed these moves. I was actually sleeping. I didn't feel so good, so I didn't really enter here. But yeah, I would have made pretty good money if I had entered. See that? So let's keep going. Actually, here, you know, let's do analysis here. Let's see how I would have entered on this day. What is the 2nd of March? This was 3 days ago. And this, guys, this is a live chart. This isn't something that I made, or you know, this is the live chart, the 15-minute chart. And I could show you guys the hourly and show you guys how I do my analysis, which I should do, but I'm just showing you guys how I enter the trades because I usually enter on the 15 minutes. So I identified this level 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 times was touched by the market. This was a pretty significant level right here, right? And you even had a consolidation right there. So let's actually label that right there. So you had a consolidation at this level, right? Right there. Then you had a little break above, and that's not an issue, right? So now here's where we are. 6:15. Wait, where is 6:15? 6:30. Okay. So I would have woken up here. I should have woken up earlier and I would have caught these moves, but you know, I'm sleeping, so it's not a big deal. So I would have seen this. I maybe would have entered an impulsive move, possibly. Maybe like an impulsive buy. Let's see, you had a rejection up here at this level. So maybe, you know, assuming this wasn't here, maybe I could have gone for something like this. Like I had a wick above, you had a price rejection. It seems like, you know, broke above this level. It broke out of the breakout. It broke out of the consolidation and broke out. And you have a pretty clean traffic going down right here. So I was pretty sure that was going to go up. You got a little liquidity grabbing all the scalpers out of their position because look at this. This was a previous rejection right here. So they found support again. This was a pretty interesting level right here. And then it went actually up and to fill in this wick, and it filled this previous candle moving down. It actually mirrored. You guys see that? It's a mirror. Look at that. Do you guys see that? These combine these candles to make one. This one resembles this one. This one resembles these two. This one is this one, and this one is these two put together. So I said that So let's say that I were to enter. I would enter right around, let's go for profits right there. Stops right here. That's not a bad trade. That's a good trade right there. I would have done that. I could have done that easily. I would have woken up. I said, oh, wait a second. Okay, price is moving up. It's making higher highs. This is going to continue. And I looked left. You see that there was congestion around this area here with the highs being up here. So I said, okay, let's take profits. I would have said, sorry, I didn't actually take this trade, but let's say I did, right? Let's say I would have. I would have seen this and said, okay, wait a second. So if price is coming up to this level here, this is a pretty good area because this is a good target area to take targets at. So I would have placed my take profit around this area, almost 10 pips. Out of closed, the 10 pips. This is a perfectly fine trade, $115. Nothing wrong with that trade. That's a perfectly fine trade. This is something that I would have entered knowing, had I been awake, I would have probably entered at this level here. And for the reasons that I just gave you. Let's keep going back a bit. So let's go back to now to Monday, the first day of the week. Let's see. Monday. Okay, so now, okay, 6:15, 6:30. Okay, so this is where we are. This is what we're seeing. We're on this candle right now. This candle is struggling to form right now. So here's what we've been seeing. We've been seeing the market making lower highs, lower high, lower high, right? So now this is signaling to me an overall downtrend, right? Showing me a downtrend of the market. Even this, look at this, lower lows. You see that? It's going making lower lows. So this is signaling to me. I'm not actually using trend lines to trade. I'm just showing you guys the direction of the market. This is in a downwards channel, which it actually respected, right? This is the direction of the market. So now you're here and you're saying, wait a second, price is not going up, it's going down. So you could have said, okay, wait a second. Okay. Let's see. It went up. It didn't really have a rejection area so much. You know what? You could have even said, even played safe. You said, you know what? Okay. Because you never know these things, right? You know what? You never know. You never know. So let's say that I would have entered right here. I said, okay, if the market breaks below this level and continues, then I would take a sell. So let's say I take a sell and I did a short position, took it right there under this wick. This is something this isn't hindsight. This is something that I would honestly, this is my strategy. I'll put my stops just above this rejection area. That's good. 10 pips. Yeah, that's fine. And then I would have gone maybe for something like that. Because this was an area of rejection right there. I've gone for that. It's 1.701. And look at that. Would have been filled. This is a trade I would have done. 100%. If I had seen this setup, because I was on a trip this Monday, so I wasn't at the market. But look at that. Tell me you wouldn't have done that. Right? I mean, but it makes sense. Let's keep going. Here, I'm literally, I can do this like all day. Like this is what you guys wanted to see, no? Like how I trade, here. This is the trade I took. This was last week here on the 26th. So look at this. Look at this support level. Found support, resistance, wait, broke, came above. All this in the London session. Now 6:30. Now here's where I was. I woke up 6:30. 6:30 every day. 6:30. I'm on the charts. This is my candle right around here. This is the candle. So we see a break above, signaling pressure, moving up, and whenever you see a wick like this, it's gonna get filled. But give the market some time to get there. So it moves down because this is a strong area of support on the 4-hour. Moves down and look at this. Find support right at this level. 1, 2, 3. It's a mini consolidation, right? And if you were going the 5 minutes, which here I'll even show you, it's going to 5 minutes at this level on the 26th. So look at that. At this level, right? This was a support. See that? It's a little congestion zone, like a consolidation zone. Let's go back on the 15-minute. Wait, no, I was here. Okay, this is where we were. Okay, it's a little rusty. It's like a little rough patch right here. But let's say that Not let's say this is the trade I took. You guys see I didn't even put this here. This was there before because this is the trade that I took. I leave, it's like a fossil. Like I leave these little remnants so I can go back and look at my trading and see where I could have improved upon for backtesting. So here, price respected this support and now it broke above. So I said, okay, if price breaks above this wick, it's going to go into fill this wick. So if I want to see it break above this level, and look at that, filled in the wick, 1.74 to 1. What does that mean? $174 right there. Before going back down, coming back to retest, and then moving back up, and then moving up eventually. But it doesn't matter. You're not going for the big moves. You're going for these small moves here. Because look at that. You had a wick to fill and move down. And look at that fill. It filled it almost perfectly. 20 pip candle right there. And even if it, yeah, it's just a good move. I would have taken profits even, maybe even here, right there, out of gone. And look at that. You're still making, still a decent move. Perfect move. Very good trade right there. Here, another one. This is another one I took right here. So what did I say? What time is this? Yeah, 10:15. Yeah, this is in the afternoon I took this trade. So I said, okay, here is the market's ranging. I said, and now it's going back up. Then I said, okay, if it breaks up, then I'll take a trade. But if it's going to go down, then you have a little support level, it broke below, and it kept going down. So I said, okay, if it breaks below this level right here, right? If it breaks below this area here, then it's going to keep going down. So look at that. Boom. I took my profits right there, $200. This was a failed trade. These were not trades that I took really. I just put them there. Now these were two losses, right? What could I have learned from these? So I actually didn't map out. So here's what happened. I saw that price was respecting. It came back and then it found resistance and it wasn't moving up and it started to move down. And this was a fake out. I should have seen that if you go now on the, let's go on the hourly time frame. Now, where was this? Yeah, here's where we were. No. Wait. I was confused. Let me go back on the 15. Okay. No, this was not where we were. We were on, wow, wait a second. No, we were on the 20, past the 26. No, we were just there. This was on, yeah, these were on 24th of February. So let's go back on the hour. February 24th. Okay, here we go. So if you look on the hourly, right, what do we see? Wow, that's so weird. Oh my God. Wait, I need to see this myself. Wait a second. It's not showing me what I remember seeing. 24th. No. Oh yeah, yeah, here we go. So if you see, we're actually in this range. And the 15-minute didn't look like that, but we're actually in this range here. So I said if it goes down, then, but look, you see, I didn't, you need to wait for it. You shouldn't trade in this range here because it's just consolidating. You want to see a break above or below. So when you got this break above here, that would have been a nice trade. You got another range. Then I took a break below this level, then you had to move down. But basically, like what you want to identify is breaks above like consolidations. You're looking for consolidation areas. You're looking for continuations. And these are just things you need to learn, right? This is basically price action. You need to familiarize yourself with these concepts. And that's basically what I do here. Look at this here. The first, oh, that was something we already analyzed. Let's keep going. I'm literally just going over my strategy. So looking back and that, right, what would I have done? I would have identified that, this level here was significant and that I should have taken not a trade here and not a trade here. I should have waited for price to break below this level. And that was my mistake. one that I will not repeat in the past. Wait for levels to be broken. No, don't just take trades because you think you know where the market's going. Let the market show you where it's going. That's the lesson that I learned from that. Was this a trade I took? I don't believe it was. I think I just put it there. I don't think that was a trade I took. I think this was a trade I took. Yes, it was. This was the trade that I took here. So why did I take this trade? So let's see. So look at this. Right off the bat, I can see that we had a level here that was respected, right? 1, 2, 3, 4, 5, not here, but 6, 7, 8 times. So I said if we see a break below this level, and look at this. So now here, you got a little bit of a little box right here. You see this? It's not breaking above this level. It's going up, but it's not breaking above. So you had to break below this level, which is where I entered. I entered below, and I said, let's see how far this thing goes. So I just wanted to see, but I actually took profits here because I wanted to make for sure. And here you see you get it's congested a little bit before it moves down, but you never know it's going to move down. You don't know that, so you have to take profits where the last pivot low was. Use the market structure to tell you. You know, you don't go for the big moves because you will lose most of the time because you don't know it's going to keep going down. You want to know where it's going to go for sure. So you want to go for this range here. You see? This is the range you want to go for right there. 1, 2, 3, 4. This is a perfect execution trade. And I took profits right up here. You see? That's a good trade. 1.31 to 1. $130 right there. That's a good trade. Let's keep going here. Did I take anything else? No, I don't think I did. But that's basically what you guys need to understand, right? Is just how to identify these certain levels, because that's what's going to make your trading important. That's what's going to change you from a losing to a winning trader, is identifying your own mistakes, seeing how to improve them, and then going back and actually seeing what you could have done differently. So that's what makes a trader good. Now looking back, this was, yeah, I could have entered here too. You see? Breaks, came very retest, but just pretty weak bullish candles here, signaling a downtrend, because look at that. It still has a range to fill. You see this? It's gonna mirror it down, and then it came back to here. Back to this level. Look. See? So you could have taken a trade maybe here. And it kept even moving down. Back to this area. So basically, price likes to do something like this. It has consolidation, moves up, then it comes back down to the previous consolidation. Then it moves up, and it comes back, and it creates a new higher consolidation. Moves up, moves down. Now it's going to probably, I think it's going to probably keep moving down. It's going to come down around. That's what I'm expecting price to do. Something like this to fill in this range here. Because you see it's signaling that's going to go down, but I'd probably enter here, and my stops above this area. Yeah, that's something I would probably realistically look at. But this is a very big trade, so I wouldn't really go for this level. I'd probably go for something smaller, but that's what I'm expecting price to do. Something like maybe go up a little bit more, maybe find some, maybe even go back to this level of congestion, finding support, maybe something like this, playing around with your emotions before breaking down, something like that, maybe. You never know, because you just see that we're just in a downtrend. We're making lower highs, lower highs, lower highs, lower highs. See that? So I think it's going to make another high, maybe even up to here. Continue this channel even. So maybe we're even going to, Manishma, how are you? So maybe we're even going to go like this. So you guys can see that we're actually making lower highs here. So I'm expecting price to come back to retest this channel, maybe even like that. Let's fix that because I have OCD. Maybe even something like this, come back, support, and then come back, and then just move down. I'm not saying it's going to happen. That's what I'm looking for. So I'm not really looking for anything major. Also, now let's use fundamental analysis. I don't know if you guys know, but there's a lot of news going on with the US dollar. the stock market has been in a pretty big decline recently, which actually explains all this bullishness that's been happening. But now Powell yesterday, look at that, yesterday, all this. That's from yesterday's news. Powell, the Jerome Powell, which is the speaker, like the head chairman of the Federal Reserve, so that gave good news. And also NFP was today, non-farm payroll. So look at that. You got all this downtrend movement because of the good news, because the yen moves against the dollar. Same thing with gold. Gold went down today. Gold sales were good today because it's against the US dollar. Same thing with the yen. So look at that. The US dollar is starting to strengthen, which is good for the US economy, but bad for the yen, as you guys can see. So now I'm expecting this good news to kind of continue. But you never know. That's gambling because you're making a bet. I don't want to bet. I want to act on what I'm seeing because I'm not here to gamble my money away, as I'm sure none of you guys want to. You're here to make money. You're here to do it in a consistent and in a profitable, manageable way. And that's all I'm showing you guys here. So what I'll need to see is now that prices here, let's zoom in here. Now that price is actually going above, see it's actually breaking above this level. I would need for it to break above probably this area here. This whole area right there. This whole rejection area. Let me actually, you guys see that? So I would wait for it to break this area, and I'll enter at this wick right here. I would enter here because look what might happen here. Put my stops right there at this level. You can see that the market respected. I would put my mark, and it's below this level too. So I would enter here, and our target probably around this level right here. So that's a 1.42 to 1. That's 17 pips. I'm risking 12. It's a little bit of a big pip like risk because I'm going for a lot, but that's what is this, $142 move? Yeah, it's not bad if it breaks, and if it doesn't, if it finds support here and then moves down, then I will need to see a break below this level here of this area of support. I would need to see a break below, and then take profits maybe even here. So let's see. Let's do something like this. Let's say I entered here, break below, put my profits up right here. I would want to go for, what is that? 14. Yeah, it's a 1.1 to 1. It's a matter of how you trade. It's a matter of, do you want to put your money at risk, or do you want to go for something that has a higher probability of happening? I personally want to go on something that's a higher probability, and that's just what I see, in terms of highest probability. Because, let's say you go all the way and it's going to fill all this range. It's possible, but it is possible, but, you just don't know. What if it finds support here and then it reverses because price is just unexpected? You just don't know. So for the smaller moves, that's where you're going to make most of your money because you can actually anticipate that. On the big moves, you can't. That's why I don't like swing trading. Swing trading means you're holding position for a long period of time. Like a swing trade. What would be a swing trade? Opening a position here and waiting for it all the way up there, a few hours. And look at that. Let's say you're going long, right? Let's say you entered right here and you're saying, it's making higher highs, coming up. You entered right here and you're going all the way up here. And you put your stop loss right there. So what would this? This would have been $500, but I guess you could have made money. There's nothing wrong with swing trading. It's just a matter of how you want to trade, because some people don't want to trade like that because it's just very risky, and you can't always anticipate that the market will go in a direction. It's just a matter of how you trade. So basically, that's my strategy. I'm just going over it again. Like, I'm going for those 15 pip, 10 pip moves where that it's most likely going to go in your direction, and then I get out. Take profits quick and get out. And that's it. That's the whole strategy, guys. I hope that made good sense to you guys. And if not, then I'm here for any questions. And yeah, that's it. So thank you for watching, and have a good weekend, and we'll see you guys next Friday.